Hello guys, good morning, good afternoon, good evening. This is FTS once again. I am not a financial advisor, neither do I give financial advice. This video is for educational purpose only. And as you know, past profit did not guarantee future results. The forex market is volatile as you take your trades apart risk management. All right, we saw what happened during the weekend, right? First of all, let me start from on Thursday. We saw that on Thursday, gold sold off as a result of Trump uh, broken a peace deal between Israel and Gaza, Palestine. So we saw that all safe haven position for gold, majority of them from the Middle East, they sold off and gold dropped rapidly. Then on Friday, right, Trump slammed 100% tariff on China. As a result, we saw the market, we saw the whole market went crazy, right? We saw that the volatility index from the market, right, is spiked above. Though I'm going to go to that, right? I'm trying to tell us what happened with the weekend, right? So we saw that the stock market, dipped. Saw that bond market dipped and started, you know, gaining strength again. When I mean bond, I'm talking about the 2 years bond yield and the 10 years bond yield, right? Yeah, and we saw that the crypto market went crazy, right? Lots of in short, the whole crypto market was crazy, right? Yeah. So this week, and as we all know, this is the third week of the United States economic shutdown, right? So let's see the activities for this week, right? Yeah. It says this week market return the attention to the start of the U.S. earnings season with major banks including Citigroup, Goldman Sachs, JP Morgan, Chase, Wells Fargo, and Bank of America, Morgan Stanley's, set to report result. Meanwhile, as the U.S. Government shutdown enters the third week, the releases of key economic data such as CPI is expected to remain delayed, right? However, traders will still monitor other schedules update, including industrial production, the NAHB Housing Market Index, the Philadelphia Fed and New York Fed manufacturing surveys, and the NFIB Small Business Optimism Index. So in China, attention will be turned to trade, inflation, and banking activities, while in Europe, investors will watch Eurozone industrial production. So the final inflation reading for Germany, ZEW sentiment index, and UK labor market and GDP data, right? Yeah, elsewhere, Japan political development will remain in focus, right? Yeah, so let's see the economic activities for the week. So Monday is public holiday for the banking holiday. It has given banking holiday for Canada, right? Yeah, and for Japan too, also National Sports Day, right? And on Tuesday we're seeing Fed chair will likely give speech, right? And German CPI. Then on Wednesday, core CPI for the United States, right? So which is expected to be sticky, as you can see, right? Yeah. So let's see month of month, right? So year of year, let's see what the CPI data will look like. So the CPI data would likely drive the market, the tendency to cut rates, right? Yeah, more, right? So Thursday, we have a GDP month of month, core retail sales, initial jobless claim, Philadelphia's manufacturing index Friday, PMI, the crude oil inventory then on Fridays. The non-farm payroll was carried. This is the third time that postponed. This is the third week that postponed the non-farm payroll, right? So let's take note of that, right? And CPI for Euro area. Okay. Yeah, so that is that. So let's head to our chart and see the fundamentals behind the movement of market and everything, right? So I saw this where from analysis I did, right? Yeah, so these are just how I perceive the market will be because on Fridays I think that Friday when price move all the way to its high. Oh, sorry, on Thursday, yeah. So I expected price to do retracement before the next day we saw Trump announced 100% tariffs on China and all of that, right? And the market went crazy. So these are the fundamental reasons why the market is bullish. So this bullishness you're seeing here is tentative, in the sense that it's a short-term bullishness, right? Yeah, because we know already that they are cutting rate, and there is an economic, will I put economic shutdown on U.S. Nations shut down, right? Yeah, that is why you see some of these key economic data have been delayed, because they have not resolved these whole issues, right? But fundamentally, we saw that Fed cut still price in, right? Yeah, but U.S. political shocks shutdown, or shocks, and geopolitical escalation between US and China. So we saw what happened, right? So, yeah, so we saw what happened, how the whole market was crazy. So because of this, we're expecting safe haven, right? So there should be inflow of cash flow into United States dollar, right? Yeah, so we're expecting an inflow, so which will likely give us a short squeeze and risk off um, equity uh, move, which will likely amplify the rebound of the United States dollar. So you can see that US 2 years and 10 years yield recovered from 5 weeks low as expected. So yeah, so technically you can see that the DSY reached 1995, right? Yeah, it reached 99.5, which is best is August 1st, and sold off to 98, right? You can see from here on, due to China's US-China tariff escalation. So we're seeing that this place will likely be a support from here. So likely be a support from here, that which will likely make price to rally. For we're expecting a rally from price here, because of safe haven status, right? Or safe haven status of the United States dollar, right? So if you look at the volatility index, before I normally do my analysis, one of the things I look out for every week is that I look out for the volatility index. And I said something. Now, whenever the volatility index, the volatility index is also known as fear index. Whenever there's tension in the global economy, you see that the volatility index will rise above 20. Once it breaks above 20, just know that there is tension, right? That means there is geopolitical tension, or there's political crisis in the global economy, which will likely drive investors to push in their funds from risk on to risk off. You understand, right? Yeah, risk on means you're investing in currencies and investment that will likely bring money to them. While risk off means they are taking the risk off the table, trying to put their monies into safe haven. So whenever price hits, whenever this volatility index trades above 20, that means there is tension in the market. You can see here, because of the Trump's and China escalation, the 100% tariffs on goods that we likely imported to China. We saw the volatility index shoot all the way to 21 from 18, right? All the way to 21 shows tells you that there is there's a tension in the market, right? So if you look at it from daily time frame, you can see, right? So in as much as price above 20, that means safe haven assets or safe haven commodities or currencies should be our focus, right? So we're talking about the gold, talking about the United States dollar. That this is the only reason why the United States dollar will be bullish, because there'll be inflow of cash into the United States dollar. And next week, China announced that they would likely retaliate the United States tariff. That means they'll likely impose 100% tariff as well to the United States goods that are coming from United States to China, right? Yeah, so that is it. So in as much as this volatility index is above 20, that means we will focus more on risk of currencies, right? Market sentiment like JPY, JPY, CHF, gold, and the United States dollar, right? So that is it. And we saw that the 10 years bond yield, right? Let me go to 2 hours time frame. You see, right? So the 10-year bond, the 10 years bond yield, I think after the fall started rebounding. This rebounding means started coming up again, right? That means we're expecting a push to the upside for the United States dollar, right? Yeah, right. Then the 2 years as well, 2 year bonds as well, is also did the same thing. That means we should expect a push to the upside for the 2 years 2 years bond yield, right? So we saw that. Then look at the stock market. Look at the stock market. There's a deep crash for the stock market. The stock market, United States stock market lost, I think, it crashed by 3%, right? Yeah, and we saw Bitcoin also did a dip as well, right? Bitcoin did a dip, right? Yeah, all the way from 122,000 to 13,000, right? Yeah, and I tell you, it was crazy, honestly. I think one of the whales died in, I think one of these countries, right? Yeah, he died in his Lamborghini because of this shock, because all his portfolio went red, right? It was red. So, that's the problem with crypto market, right? Yeah, the stock market did not take that hit that much, despite in this whole thing, but because of the panic that was sent into the market, we saw that the volatility index, which is also known as fear index, rose all the way to 21 from 18, right? So we saw the amount of fear that was in the market. So this was panic, right? So there was a massive panic in the market, and this whole thing happened, right? So we're expecting an inflow into the dollar, right? Yeah, we're expecting an inflow into the dollar. I think because of the safe haven status, and that just for me, that just the only reason, right? So we're expecting here to be uh we should expect a rally from here, because this place might likely act as uh a support, right? Yeah, if we are talking about demand support and resistance levels, right? A good support, right? Then let's go to USJPY, Japanese yen, right? So for me, where after I did analysis, I was just looking at so many things, right? Yeah, fundamentally, the Japanese yen is bearish, honestly, because of the new prime minister that is dovish in his policies. He's not talking about rate hike at the moment, right? Yeah, so he's a he's a stock person, right? Yeah, he loves the stock market, and stock market and the bond market, they are opposite, right? So any dovish prime minister would likely support the stock market, while a hawkish prime minister would likely support the bond market, right? Yeah, so you can see that the new party, right, their policies was missed, right? Uh, Looser fiscal stroke monetary teeth, right? So, and we saw that because of this, we saw that the yen fell, right? If you look at the yen index, right? Look at the yen fell. The yen fell because after that was on Sunday, immediately this morning there was a gap, and so the market started recovering just that Friday because of the Trump system, because yen is a safe haven asset. So investors started pouring in their cash on the Japanese yen, right? Yeah, that's why we saw this whole thing. And the Japanese yen, based on safe haven status, the Japanese yen will definitely rally. So this gap will be breached, right? This gap will be covered. That is what I know for sure. That you are seeing here will be breached. All of this gap. Because there's a gap here, this gap will be breached. So take note, this gap will be breached, right? Yeah, I'm not talking about USD JPY. Both of them are both of them are safe haven currencies, right? Yeah, I'm talking about the yen pairs. I'm talking about the CAD JPY, NZD JPY, AUD JPY, CHF JPY, and GBP JPY. They are going to sell off, honestly. They are going to sell off because of safe haven currencies, right? The yen will be strength. The yen is Japanese yen will be strengthened, but not against the not against USJPY, because USJPY would likely strengthen as well. Though price might don't follow the way to this level, then it will likely rally again. But that's it. So we are seeing that we say that the yen remains highly rate sensitive, right? Higher US yield, right? Plus short squeeze dynamics push USJPY higher, right? Yeah. Geopolitical risk can flip over to safe haven, right? So that's what I'm trying to say. So the yen might, because of safe haven, the yen might start gaining strength. I said so, right? So the yen might start gaining strength. So technically, you can see the dollar so the dollar settled at 147, right? We saw that and we see 147. That was not really dollar settled. Okay, 150 something, near 147, okay, and above 153. Okay, that's true, above 153, and then sold off to 152. Okay, it's correct, right? Settled at 150 and 147, and rallied out to here and sold off to 150, 151, 152, right? So we are looking at price at this support. One for me, I would like to look at price at 150 at in terms of support, right? I would like to look at price at 150 in terms of sorry, in terms of support. I'd like to look at price at 150. Yes. 150. So towards time frame looking at support at 150. So price will likely drop all the way to this level before going on, right? Yeah, so that is that about that. Okay. So so for me right now, the most important thing in the market right now is the uncertainty, right? Geopolitical escalations, right? So it's going to affect everything, especially the other pairs like GBP, USD as well. So fundamentally speaking, sterling is extremely dollar sensitive, right? That means in terms of correlation, right? So US corrective strength and global risk off weighs on GBP. UK domestic data are weak. That is it, right? Yeah, so you can see that slightly bearish per se, right? But ask yourself, look at the GBP pairs. Look at the GBP pairs like GBJPY. No, no, no. Let me take the part of it. Look at this. There was a strong rally, right? Yeah, there was a strong rally as well. Look at here as well. AUD. Yeah, we'll talk about this Aussie, right? Because of China, right? Yeah, I'll talk about it. Look at NZD, right? Okay. Sorry, look at NZD, right? Yeah, also look at NZD and yeah, just take a look at this space, right? So let's take a look at the way the market moved and all of that, right? So we saw that, right? So technically so through September, right? Yeah, it fell throughout September and near 1.3325, right? Yeah, 1.3325, yeah, and recovered to 1.337. So we're looking at 1.34 as resistance level. So we're looking at price coming all the way to this high before, I say price will likely rally all the way to 1.37, 1.340. So we're looking at this point, right? Yeah. So this place might act as, resistance because of the dollar rally, right? So as the dollar is gaining strength, all of this market should likely go down. I say that's what it's trying to say, right? So let's look at this as well, bearish as well because of the safe haven, the geopolitical tension, and and all that. So it's a disappointing Germany data and political risk in France weaken the euro. That's true. For the past 2 weeks now, I've been talking about the how the France economy is crumbling faster, but I've not seen the impact on the forex market, right? But I think this week it was captured, right? Yeah. So the French economy is France is owing, I think, I mean, I think I can't remember again, right? But per minute, $6,000 per minute. There's increase in their debt, $6,000 per minute, right? So and because of Africa breaking away from, yeah, as in Africa taking control of their resources, most of the francophone countries taking control of their economy. So there it has affected France. So for the past 1 year, France have changed prime minister up to like I think up to 6 times or so within 1 year. So I think recently one of the last prime minister that was elected resigned, right? So the French economy is not doing well, and the two biggest economy in Europe are German economy, France, then Italy, right? So you can see that because of this, so the euro is weakening, so the dollar squeeze. Inflicted technical damage, right? So Trump tariff threatened brief support euro, but not enough to reverse. ECB will likely still has a high bar to cut, right? Yeah, so that is a um so that is it. So technically, last week euro slide to 1.5, and yeah, we saw from here, and it recovered to 1.6, right? So need to move to above 1.16 to this, right? Yeah, to resume a bullish posture. Failure to hold at 1.6 will risk corrective downward. Exactly. So if it does not break past this level, right? If the euro does not break past this level, we are saying that okay, it should continue going to the downside because of poor European Euro the part of Germany and France, then safe haven for the dollar, and the dollar is negatively correlated with euro, right? Yeah. So Canada Canada is bearish, right? Yeah, so somewhat bearish, right? So you can see the Canada's trade drags and weak foreign inflows, right? Plus Bank of Canada easing expectations left card vulnerable, right? So for me, this whole period, one of the currency one should focus at this period should be card, right? Especially JPY, card JPY, GBP card, right? And if you look at GBP card, I will just try to talk about it. Look at GBP card massively. That was a massive rally, right? Look at GBP card. GBP card. Look at USD card as well, right? Look at USD card. There was a rally until we saw what Trump's position on the whole on we saw what happened on Friday, and there was a little push to the downside about that. The Aussie, yeah, Aussie was crazy. Aussie was deeply affected, right? Aussie was deeply affected because of China, right? Anything that affects China affects Australia because they are the main trade partners of China, right? So China tightened their export importation, right? Yeah, they tighten their exportation and importation. So that affects Australia. You can see Australia is exposed to the US-China tension via trade, right? China tightened export control and tariff trade hit Aussie very, very hard, right? So correlation versus DSY remains strongly negative, right? So you can see how Australian dollar, so anything that affects China affects Australian dollar. So if you want to understand how to trade Australian dollar very well, you should look at what happens to China. Anything that affects China negatively affects Australia negatively. Anything that affects Australian market positively affects China positively, right? So that is just it. So that just it. Then for gold is bullish, right? Yeah, we all know that gold rebounded from this whole thing. We saw that just a minute. All right, fundamentally speaking, you can see that gold is bullish, right? So gold rebounded that Friday. Gold rebounded because of I told you that gold fell as a result of the peace deal that that happened between Israel and Palestine, right? So because of the war, uh, the Middle East, they started buying gold because of the tension and all of that, right? We saw the geopolitical crisis that happened within the Middle East, I think, for the past 2 years, a year and so, right? So we saw that gold has been rallying because of that, right? Immediately the peace deal was reached, there was a sell-off on gold, right? Yeah, there was a sell-off on gold, and we saw an immediately after the sell-off because of the Trump announcement of China tariffs, safe haven started scamming on gold again, and boom, gold rallied again. You can see. So geopolitical escalation on rare earth, upper bracket rare earth metals, tech export control and tariff threat, right? Plus risk of equity moves and stay lower yield support gold. Right? So these are the tariff support gold, the risk of the safe haven, the tariffs, tariff risk and all of that, right? Yeah, and gold is the hedge against inflation and risk of market sentiment, right? So these are the things that really push gold higher. And as the Fed will likely ease monetary policy, right? Will likely ease monetary policy, we expect gold to rally. So that is just it. So gold will keep rallying and all of that, right? Yeah, so I think if we try to summarize about everything about the market, I think we can easily say that the overrated team, like I said, political risk, right? So there's political tension right now. That's the most important thing. US China escalations, um, US shutdown, France and Germany weakness, right? So it's dominating the flow. So money's cash will likely flow more into the safe haven and risk of market sentiment, currency and commodity, right? Like gold, USD, Swiss franc, Japanese yen. right? Yeah. So these are the so we should expect this say that so that has driven the corrective dollar rally this week, right? But escalation has swiftly re-rated risk and rebalance the FX more. Right? So short term rally, so the short term squeeze. So dollar should rally short term, gold rally this, yeah. So best to watch. So these are the whole thing that I thought to talk about. So these are so that does the activities for the week, right? So I love this sentiment index because it shows us that there's fear in the market. So whenever there's tension in the market, this is what you should expect, right? So in case you've not subscribed to my channel, kindly like, subscribe, and comment in the comment section. If you have any question, you can let me know, right? So these are just my take for the week. This week I'm expecting dollar to rally, the safe haven inflows, right? They should safe haven currency like dollar, Japanese yen, and Swiss franc. So actually, I'm going to be bullish on. I'm going to be sorry. I'm going to be bearish on GBP JPY, right? Uh, CAD JPY, NZD/JPY or ZJPY, and this CHJPY I might not because both of them are safe haven, right? Yeah, I'm gonna, but why that GBP AUD, right? If AUD because Australia dollar is affected, I'm going to be bullish on it, right? I'm going to be bullish on it. Then from the major pairs, I'm going to be bullish on USD JPY. I'm going to be bearish on GBP USD, bearish on Euro USD, and USD card, I'm going to be bullish, right? Yeah, because card is just nonsense, right? Yeah, GBP card as well, I'm going to be bullish as well, right? Yeah, so these are the things we are looking at for this week, right? The Euro card per se. They might likely cancel out, but Euro is still better in terms of, yeah, Euro is better off than that. Or Euro AUD, Euro is still better off. Euro AUD should be bullish. Yeah, to expect bullishness. You can see it was crazy because Japan, China was affected, right? Yeah, that is why you see Euro rally very, very strong, especially, yeah, that just is so. In as much as there's uncertainty in the market, let's see what this week we're going to enter look like because China would likely retaliate and there's still going to be inflow into the safe haven currencies and gold, right? So that's it for me this week. So in my own trading community, I think would likely post setups and all of that. So don't forget, like I said, the yen will definitely rally. So we're going to experience a rally for the yen, right? Yeah, but a break and retest in this zone will likely push yen to the upside. So as this JPY index is going on, that means all the yen pairs should sell. So take note of that. So that's it for me this week. Have a lovely week ahead. Thank you. Yeah.